Thank you everyone for joining us. Back again, Tom O'Loughlin, Michael Oretsky, Larry Genet with the South Florida Industrial Real Estate Rundown podcast. Appreciate you all tuning in and really excited for this episode 2, which we're going to focus on small bay leasing and operating expenses and how they're impacting the market and how everything's going. But first, we'll jump in real quick. Mike, to you first. Yeah. What's changed in the last couple of weeks since our episode 1 and how has the market shifted a little bit?
Yeah, so we're obviously sitting here just beginning of October, so we just started Q4, and we're really starting to see that Q4 build up and pick up that we're used to seeing year in and year out. So summer slowdown, came and went, and hitting Q4, everyone's back in their chairs. The tour volume has gone through the roof. The proposal volume has gone through the roof, which is great because we really saw the tours increased and still go up, but where we were lacking on the proposals and the execution. So a couple of deals that were sitting out there for a long time have started to get done, and we're really bullish for the rest of Q4 with how we started out the week.
So tour volume is up. Tom, what about you?
Yeah, I would echo what Mike said. I think tour volume's up, inquiries are up, proposals are up, and it seems that certain companies are finally starting to make that decision. And I think the deals are now, what's different between let's say this month and a couple months ago, the deals weren't out there. Now the deals are out there, and it's just a decision from these landlords about putting an aggressive package in front of the tenants to make the decision. So it's trending in the right direction. And I think especially Broward, only a few spaces to go, and that'll tighten up pretty good. Dade is chipping away at their vacancy, and there's actually deals getting inked up in Palm Beach as well too. So we'll see. It's going to be a race to the close.
So the quick update and very quick summary is tour activity is up, proposals and demand and leases out are up, and landlords have a shot here to get a bunch of deals done before the end of the year. It sounds like there's a lot of stuff on the 1 yard line, which I've heard you both say. So that's really exciting and great for the market. So hopefully we'll be in a very strong position going into 2026.
Absolutely.
If a bunch of these deals get inked. So really what we wanted to focus on for this episode is small bay. It's become obviously a huge part of our clients' business. 10, 15 years ago when I was starting out here, and you were, 5 years at CB, small bay was kind of like...
Mike wasn't even born yet.
Yeah. Mike was licking his wounds in research. There wasn't any institutional demand for purchasing small bay industrial real estate because it was just deemed as too management intensive, and nobody really needed to focus on it because there was tons of other stuff to buy. But as yields compressed and the institutions went on the hunt for better returns, small bay became very popular and everyone dove in. I mean, everyone. So while, guys like my uncle, Ben, used to sort of dominate the small bay leasing, the small bay purchasing opportunities, now all the biggest institutions in the world have dove in, and it's become a big part of our leasing business, right? A lot of our volume, over 200 deals a year, a lot of that volume are small bay deals, sub 10,000 feet, let's say. So it's become a big part of our revenue and our business. It's become a big part of our investors and our clients' business. We've sold a lot of small bay industrial real estate in South Florida, and we're leasing tons of it, and we seem to just be getting more and more every day. So it's become like this key component of not only the brokerage business, but also our investors' business. So if we could just touch on kind of where demand is and what bay size ranges are most active and where rents are, I'll kick it to both of you separately. So Mike, starting with you, where are rents for small bay, and where's the biggest amount of demand? Where is it most active, white hot?
Yeah, so on small bay, not to get in the OpEx discussion too early, but we really talk at gross numbers because that's what especially these smaller bay tenants are looking at. They're looking at what their monthly cost is going to be. So we're seeing that settle out in the $24 to $25 per square foot range, where they kind of top out, where these businesses can't really support much more than that. We always say the analogy in that small bay stuff, you have a lot of service oriented groups, HVAC companies, cabinet companies, towel guys, all those home related tenants up and down Powerline Road. They can only make a certain amount of cabinets, and at a certain number, their business just doesn't support it. Demand was a little bit slower through the summer, and that 2,000 to 6,000 square foot, kind of our, bread and butter, call it small bay tenant. We've seen that ripping back the last week. In one of our small bay parks, we've had a couple vacancies that are pretty much going to be coming off the board here in the next week or so. So demand is really back. And to your point on where it was when we were all or when I was starting here at least 7 years ago, I mean, we were getting 1 or 2 done a month at 9 or 10 net, and then that grew ferociously where numbers went to the 18, 19, 20 range. Where obviously, that's peeled back a little bit since the OpEx increase, which we'll get into, but demand is at a healthy level and they're starting to pick back up.
Yeah, it's a good point. I mean, base rents have basically doubled in not that long of a period.
Yeah.
So it's pretty incredible.
Absolutely.
And obviously nobody's building it, so it's not like there's a constant addition of supply coming on the market. So long term, that's a great place to be in and to invest in. Tom, to you, what if you had to pick 2 industrial submarkets, both in Dade and Broward, to buy a small bay warehouse, where would you buy them, and where do you think the small bay market is heading, sort of medium term?
Yeah, I mean, small bay different than bulk distribution. Bulk distribution is, infrastructure, highway accessibility, airport, port related. Small bay is almost like opposite end of the spectrum. It's service. It's a service area. It's a service market.
Yeah.
So like a lot of these small bay projects, they can be really located in any submarket, but it's really based on rooftops or condos or concentration of population, because it, like Mike said, it's your cabinet maker, it's your AC guy, it's your pool cleaner, it's the pool supply guy. It's all these normal things that take to run houses or condos or townhouses, whatever it is. So, anywhere on the edge of a large population base. So like a lot of our stuff in West Broward, of all places, like Tamarack, Sunrise, does really well, because what's just east of Tamarack and Sunrise, millions of rooftops and Plantation and, Coconut Creek and, all those areas, Sunrise, all up and down that area. Then obviously in, you've got Pompano, Deerfield. What's east of there? Lighthouse Point, Pompano Beach, Fort Lauderdale. There's just rooftop after rooftop. And then if you go into Miami, like I know South Miami has a lot of good small bay that, performs well, because you head north, that's where everybody lives. If you don't live on Brickell, you live south of, Coconut Grove and, all Pinecrest and, the Miami area. So like it's really population and density based. So like you can't go wrong. That's the great thing about small bay. It's like really you're just looking for a trade area. And we do a lot of small bay parks, and every one of those parks, there's, like I said, cabinet guy, the AC guy. Yeah, you got some niche e-commerce people that came out of their garage and stuff like that, but it's really a service-based business. So anywhere those locations that you can, hub yourself next to density they'll work.
What do you think is going to happen in small bay over the next 3 to 5 years? What do you see happening there?
I think it's going to continue to get more institutionalized. I don't see, at least down here in South Florida, on the larger, bigger, small bay projects, it's just the numbers have gotten really big. They're expensive, so institutional capital now plays. And I think you're going to still see institutions come in and pick off the local operators that are, going through like a multi-generational change. Like, hey, grandpa started it, dad ran it, kids don't want it, like let's cash out. Or guys, like these, we have 30 buildings in our park and 27 of them need roofs. The family's not prepared to do that. Like let's sell and have an institutional guy come in and take us out. So you'll continue to do that. I think you'll also still have proven operators that have good sized local portfolios, but institutional capital will continue to be attracted to it. But I think to your point earlier, the barriers of entry are staggering. Like you can't do it. Like if we didn't figure out a way to build new small bay when interest rates were zero coming out of COVID and the demand was off the charts, like if no one figured it out then, I find it hard to believe that people are going to figure it out in the future when, our dirt is going to go from, anywhere between 2 and 3 million to 3 and 4 million and, exponentially grow. So like, I think you're safe. And like technology really hasn't impacted small bay. Like bulk, you need clear height, you need bigger truck courts, you need power, you need all this other fancy stuff. Small bay, you need a roof, 4 walls, and a door. And it hasn't changed, and a small office. And like, I don't think AI is changing that. I don't think it is what it is. So I think you're safe with, and that's why you see a lot of the institutions come in being like, hey, we're not going to have to modify these things that drastically over the next 5-10 years.
Yeah, no, I agree with you completely. And I would just add that from an investment perspective, it's just going to get more difficult because they're not adding any more of it. Like I said before, it's getting more and more expensive. To build a new small bay park, you're easily over $300 a foot right now, easily. Maybe even $350, $375. It's very possible that could be the real number. But you can still buy the stuff for $225 a foot to like $250, $260 a foot from like the low end to the high end. Obviously, there's some outliers that could be a lot lower than that, but that's generally kind of the pricing that we see.
Yeah.
And rents are 16, 17, maybe 18 net on your base rent. So from that perspective, it doesn't make sense to build it. The barriers to entry are getting higher and higher. It's getting more and more institutionalized. So you've got like diminishing supply of this stuff. And as the families that own this stuff decide to sell, I think the pricing is going to continue to shoot up. And we've seen recent trades in the $250 a square foot range, which used to be insane, but today is very achievable from the capital markets and institutional capital markets brokers out there. Yeah. So that is the new market. Yeah. And it's been fascinating to see its like meteoric rise. I mean, it wasn't too long ago that this stuff was trading for like 120, 130, 150 a foot. It's not like forever.
We're talking
ago.
5 years ago, and that was
even a little bit more. Yeah.
The point I just wanted to add, we can go back and edit it, but on the demand side, these smaller bay tenants are a little bit more affected by the macro environment. Mm-hmm. So, especially with the last 2 years, one being the election, the second being the tariffs, we did see a little bit of a slowdown where they were a little bit pickier on location, where the institutional managed parks, the higher clear height, the well-managed exteriors and interiors, the on-site property management, that became less important, and they, fled to cheaper alternatives.
Right.
But now it seems that everyone who was affected or is affected by this kind of got through it, and the demand is going through the roof again. So I think they were able to work through it, and I think we have a good runway here in front of us.
Yeah, it's been fascinating to track. So I guess just to kind of wrap it up on the small bay component of this podcast, how about our new location? I'd love to hear in the comments from you guys if you are digging our new location. I feel pretty good right now. Yeah. It's nice and cold in here. We got the lights. We got the crew. This is nice. I'm not leaving again. I'm not going back to that dungeon. Just to wrap it up on the small bay discussion, we're super bullish on small bay. I think I can speak for all of us. Yep. We're really excited about it. We've got a couple of deals that are available right now. I've got one that's off market in East Fort Lauderdale. It's a small deal, but it's still a deal, and it's actually pretty good pricing. Needs some TLC. So if any investors are out there looking at smaller sort of bite-sized transactions, hit me up about that one, because I'd love to get that one sold before the end of the year. So moving on to operating expenses. This is something that Mike harps on a lot. And so I'll kick it off with him again, if that's okay. We've seen pressure on base rents due to OpEx. And I think we'd be looking at, probably $20, $21, maybe even $22 a foot in base rent, specifically on small bay. We'll just stick with that for now. Mm-hmm. If it wasn't for the increase in the operating expenses from $4 to $5 to $6 to $7, and we've got some above $7 now, which is psychotic, especially since insurance rates have come down pretty dramatically. So, what's this going to do to our market? Is it going to slow down at all? Are our operating expenses going to continue to put pressure on base rents for this foreseeable future, or is this like a little blip? Yeah.
No, I mean, it's a great question, and something that we're going to have to deal with as a market in general here in South Florida, especially as these trades continue, as you hit on, that 250 plus a foot. I mean, that's pretty much the minimum we're seeing.
So 250 a foot on taxes, you're at like
$4.
Yeah, like $350, $4 just in taxes.
Yeah,
on your
so
OpEx.
When we were talking that $18, $19, $20 net numbers that we were getting in peak COVID, the operating expenses were $350 to $4. Mm-hmm. Where now, where you hit on base rents, call it, 17 to 19 net, at least in the small bay, our OpEx now is $650 to $7. Yeah. So I mean, in short answer, yes, it is going to be. I'm not even calling it a trend. It's just the new reality of something that we're going to have to deal with. And again, these tenants, I don't care if you're small, big, sideways, or you're looking at your monthly income.
It's all in number.
Now, obviously, we do agency leasing, and we understand that from the landlord's perspective. We're looking at base rent, and that's how this is tracked. And And I think Tom said it best, on probably from base rent perspective, we're 10% down from peak. But if you talk to any tenant in the market, their rent's going up 20% per year because they're looking at their gross numbers. So I think it's here to stay. I think as the market becomes even more institutional than it already is, I think the trades are going to continue to grow. The numbers are going to continue to grow. And, I don't think property taxes are going anywhere.
Yeah.
So, I mean, it's kind of the new norm. The thing we have going for us here in South Florida is we are a service-oriented market. If you're here, you have to be here. You service the Tri-County. So we've seen it 100 times where tenants, oh, I'm going to go to Port St. Lucie or Homestead and get a cheaper rate, and they go and explore it, and they can't make it work.
Not happening. Yeah.
Anyone who was going to do it has already done it.
Yeah.
So, I mean, it's just the new norm. It's something that we're going to have to work on with the tenants and, get in front of them early, educate them. But, I mean, it's here to stay.
Right. That's really interesting. So, Tom, what about you? What do you think's going to happen with OpEx, or what's something maybe, landlords could do to try and mitigate the increase in the OpEx? Is there anything we can do?
Well, I mean, I think, like Mike said, and like you said, a large portion of the operating expenses are being driven by property taxes. So, like, it's kind of like, what do you expect? You go sell a property for $225, $250, $300 a foot. Like, the tax man's cometh.
Yeah.
Like, he's coming after you, and you can't expect you to trade your property or buy a property at that and not get reassessed. So a large portion of it is here to stay.
Yeah.
Because I don't see these municipalities or these governments changing the tax basis. And if people think the stuff is worth that, then it has to get taxed at that rate. That's
right.
They're correlated. One of the things that's hitting us, obviously, insurance over the last couple of years has popped up. It's stabilized a little bit, but it's still a lot more than it was 2 or 3 years ago, and that's not going backwards.
Yeah.
Obviously the insured value of all this stuff goes up in correlation with the assessed value, how much it's worth. Like, trying to replace it, it's like you got to insure to replacement costs, and that's expensive these days.
Right.
And then just the general operating, the porter service, the security, the landscaper, the sprinkler guy, the fire alarm tester, the fire alarm sprinkler vendors. Like, none of those guys are offering their services cheaper now than they were a year ago or 2 years ago. It's all inflated because their costs have all gone up. So, I mean, I think it's just expensive. And, I think we're going to have some correlation where, the landlords are going to want consistent rent growth year over year over year. And some years it's going to be governed by the rents. Overall rents are going to grow, but one year it might be more operating expense than base rent. And one year it might be more base rent versus operating expense. But, the tenants are going to look at this stuff, as one big bucket, and you're going to have to kind of wean your way through it and start talking gross numbers with these tenants, because that's what they're going to be after.
Right.
It's not, I've used the example in the past where we used to just quote, oh, hey, the rent's 16, 17 net. No one would ever ask what the net version of the equation was.
Yeah.
Now people, because the net version of the equation in Dade is $4, $5, $6. In Broward, it's $6, $7, $8.
Right.
You can't overlook it now. It's a third, it's 25% of the rent.
Yeah, substantial.
It's a big input. So I think people are going to start looking on a gross basis, and, there's going to be some efficiencies. Some of the bigger guys are going to be able to cut their insurance numbers. Some of the bigger guys are going to be able to get better landscaping bids and stuff like that. But I don't think it's going to be dramatically different.
Right.
Because, as you guys said, $3-4 of this stuff is taxes.
Right.
And that's not going anywhere.
You bring up some really interesting points I'd like to just touch on a little bit. One is the insurance component. Insurance rates have skyrocketed tremendously over the years, and it was a capacity issue, and there are all kinds of things that were messed up. One of them was replacement costs, and they were woefully low, and replacement costs have been raised up now, probably not enough, frankly, but have been raised up a lot by the insurance companies to try and get more in line with what it would actually cost to replace the property. And that was one of the big drivers of rates. Rates have come down between 20 and 40%, depending on who you are and where you are.
Yeah.
Especially in South Florida for small bay portfolios, for instance, they're down very, very significantly, but they're probably not going down any further. The capacity issue has kind of been figured out. Replacement costs have sort of been figured out, and I don't see insurance costs going down. So there's been some reprieve there, but it's still dramatically higher.
We're one storm away from any of those savings going out the window. I'm knocking on wood, but it's all in control until XYZ named storm shows up and throws all the capacity out the window.
Right.
But
looks like we're good for now.
yeah.
So
This week.
So in terms of operating expenses, it looks like it's put pressure on rents. There's like no way around it. It's put pressure on rents. It's held back base rents, both for the bulk and for the small bay stuff, really across the board. And it's really created an environment where it's difficult to create a lot of value for us as landlord agency guys, because even though the gross rents are substantially higher year over year, the base rent hasn't really moved, or it's even come down a little bit. So that's just painful for us on our side, because the thing we wake up and go to sleep with is how we're going to drive value for our owners.
Yeah.
And it's been done, but it was on the wrong end of the spectrum. So it's
Like I know you and Mike
tenants
always,
ate it, right?
You and Mike are always talking about this, but like I'm shocked that people don't pay more attention to the gross rental rates.
Yeah.
You
They
could
are.
have property A that's owned by a local family that's got a 450 OPEX, and then you can have property B that's been traded by institutions 3 times over that's at 650, and the base rent gets treated the same when the gross up number is $2 apart on OPEX, and no one spends 5 minutes on it. They just,
We do.
But I mean, the vast majority of the
paying
market.
attention.
Yeah, I know that. But like the vast majority of it's crazy. I think you're going to start seeing, as these rents get this high on a gross basis, everything's going to get scrutinized. And I think you're going to see people spending a lot more time, because traditionally all of us leasing people and all the tenants, brokers, everybody says, can't touch operating expenses. Don't even look at it. Don't touch it. It's a fixed thing.
Yeah.
And everybody just glances over at it and moves
Yeah.
on to the base rent. I think you're going to have people like unpack that a lot more moving
Right.
forward because, like I said, it's 15, 20, 25% of the total rent you're paying.
Right.
It's a big component now.
Bring on the robots.
Well, too, it's funny
Yeah.
if you go back 18, even 24 months ago, and look at anybody's comp file that you were sent, operating expenses wasn't even a line item in the comp file.
Right. Nobody tracked
And like we talked about it 3 years ago, we're like, hey,
Nobody
we should
tracked
start like paying attention to this and watching like the
Yep.
growth value, and
Yeah.
we're probably, like I said, 10% up year over year on an annual gross basis, which it's just something that we're going to have to add in our discussions with our owners and with the tenants. I mean, it's a two-way street. We're getting in there earlier. We're educating them on the process, and we're doing what we can to mitigate it. But I mean,
Right.
it's here to stay and just the new norm.
What's funny about what Mike said is that the unsophisticated tenants are actually more sophisticated about the gross rent than the large sophisticated tenants are.
Yeah.
Because the unsophisticated local small bay guys are like Broward County. I can only pay $25 a foot all in, hard stop. I
No
don't
matter
care.
what. Yeah.
Dade County, it's a little less. It's like probably $21-22 depending upon what submarket you're in. And they are like super sensitive. I cut you one check a month. This is the total amount. I don't care what bucket you apply it to. I can only afford $5,500 a month, $10,000 a month, whatever it is. Then you have these super sophisticated big tenants who are like, don't look into it. And they're like, I thought you said my rent was 16 net. How am I paying 22 this year, 23 next year, 20? It's operating expense creep.
Right.
And it's going to become an issue.
One of the things I've seen that if you have a large enough portfolio and insurance costs are hurting you badly, if they're significantly higher than you think they should be, going with a big firm like a CB or someone similar is actually a really good idea because you can get under their insurance umbrella. You've got to hire them for property management.
Right.
So there's that, which is significant. But if you can get under their insurance umbrella and get under a bigger firm's insurance umbrella, your insurance costs can go down 20, 30, 40%, which is very significant.
Absolutely.
And probably offsets the whole cost of going with them in the first place rather than self-managing.
And I think you'll see people take a more proactive approach to re-roofs, like newer roofs.
Right.
Impact windows on these older buildings, impact overhead doors. You'll see people proactively attacking 30, 40, 50-year inspections. Right now, they're like, oh, I don't want to do, and like all that stuff adds to like insurance, not just windstorm. There's other components of insurance too. And I think you'll see people start taking a more proactive approach to try to do anything possible on insurance, on the CAM, on the taxes, on everything.
Super interesting. Well, this was a great discussion. I think we covered everything with regards to small bay and operating expenses. Maybe just leave the audience with a quick anecdote. What do you see for small bay in the next 3 to 6 months, Mike?
Yeah, I mean, I see a huge boost in activity. I think rates are going to stay kind of in that 24 to 26 all-in range that we're seeing. but I think a lot of the spaces that have been sitting for a while are going to get taken. I think they're going to get, in that mid 90s occupancy rate. And I mean, from there, that's when small bay can go through the roof. I mean, that's when you're adding $1 to the rate pretty much a month.
Yep.
So again, I think there's a long runway. I don't think you can duplicate this stuff. These tenants aren't going away. Like they all can't, go into their garages. There's only so many small, mom and pops that can really beat that market. So I think we have a long runway here.
Yeah. What about you, Tom? What do you think about small bay for the next 3 to 6 months? What do you think is going to go down? Feel free to disagree with that guy.
I mean, one of the things that we haven't mentioned that is a key component of small bay is that it's heavily correlated to the macroeconomic environment. Like if we're all feeling good, like everybody is today, and I think that's why we're seeing a reestablishment of activity on small bay. Stock markets at 45, 46,000, Bitcoin's through the roof again. Everybody's opening up their monthly statements. The parentheses are gone. The big dip earlier. Like people are like feeling, flush again. And when that happens, and their significant other says, hey, I want to redo the garage. I want new cabinets. I need a new bathtub. I want a, soaking tub in the back, whatever that is. All that stuff is small bay world. And those guys are probably seeing a resurgence of like, hey, we were on the sidelines about redoing our kitchen, but like, Bitcoin and the stock market, I'm feeling pretty good again. Like, economy, tariffs are in the rearview mirror, the elections in the rearview mirror. Like, it sounds like we got some good stuff going. Like, let's do the project, honey. And like, I think you'll see, as long as like, the macro economy continues to perform, I think you'll see a continued upward swing in small bay activity because it's a direct correlation. And then as we talked about earlier, as the institutional landlords get in there, they're going around these parks and they're fixing, the drainage issues. They're fixing, so like some of the things that hindered some of these parks from, adding some rent, adding some value to the rent that they could achieve are getting addressed, like with institutional money. Like, hey, like I know your rent went up, but guess what? Your roof no longer leaks either. Right. So like it's kind of like, and some of these guys are saying like, hey, I know I might be, $1, $2 more than the person across the street, but like truck court doesn't flood.
Right.
Like we pick up the trash. Like we don't have broken down cars, all over the property. Like we police it. So like I think the institutional guys should see some runway here moving forward. Awesome.
Yeah, I see rents probably ticking up sort of mid next year in small bay. I definitely can see a place where we get to $30 a foot gross on small bay. It might not be immediately, but I could certainly see that happening. It's almost inevitable at this point, really. Just a question of how long it's going to take. Is it going to be 6 months, 8 months, 12 months, or 2 years? But that's certainly going to happen. And if you're buying small bay industrial real estate, I'll speak to all the investors and clients that we have. If you've got a 5-year horizon and you're buying small bay, as long as you're good for the first year or two of just sort of like kind of breaking even or maybe not making a ton of cash flow, like you're going to crush it. Like there's no question. Obviously there's ups and downs, and this isn't financial advice, but I think long term, if you're buying industrial real estate in South Florida, specifically small bay, you are going to crush it over a 5, 7, 10-year period. I just don't see a way backwards in that category unless it's short term.
You handle a lot more than me and Mike. Me on the sales side, I got a question for you. Like, what are you seeing, like, on a cap rate perspective? Like, obviously we know where bulk trade's at. We talked about that on the last episode. Yep. Like, this small bay, like, what are the cap rates? And, like, is there a difference? Like, if I'm buying something small bayish in Hialeah or Doral or Homestead versus Pompano, or is it like it's just the financing thing and it's all of South Florida gets lumped together? Is there, like, movement in those cap rates, or what do you see? Because I know you sell a lot of it. So
yeah, it's a quality question. It's quality both in terms of the rents that you're achieving and the construction and type of property. So if you've got a super tight, narrow truck court somewhere in Hialeah and there's some flooding and it's like not so great and it's kind of a dirt road, obviously that's going to impact you dramatically compared to like the really great, best in class, sort of 20-foot clear and sprinklered small bay stuff that you can find scattered around Fort Lauderdale. So the cap rate spread you're going to be looking at is probably anywhere from like a 7 to like a 6 in place, with some opportunity to market some of the rents over, call it a 2 to 3 year period. So if you're borrowing at a 6 or 6.5 interest rate, you're pretty much on par breaking even, or maybe even a little bit negatively leveraged. So it's tight. It's hard to make it work. But like I said, if you're here for the long term and you've got a 5-year hold, it may not be a, cash flowing opportunity in the first year or two, but in year 3, 4, 5, you really should be able to really step up the rents and be really successful with that investment. And if you're a longer term holder, forget about it. It's going to be awesome. So
do you ever foresee the condo craze coming back, where someone will buy like a multi-tenant park and condo it out and sell it for $400 a foot?
I don't see why that hasn't happened. I think it should be happening in very specific areas. Yeah. Like if you own Great Small Bay in Doral, or you own Great Small Bay in Fort Lauderdale, East Fort Lauderdale, or if you own Great Small Bay in Pompano, I'd be looking at condoing it. I bet you we could achieve, $325 to $350 a foot, maybe $400 for like something really special. Yeah. Where you're purchasing it at like $225, $250 a foot. There's definitely an argument.
Yeah, that arbitrage. That's
yeah. You could do that, especially if your basis is super low.
Yeah.
And you've got 60,000 feet of it that you basically your basis is zero. It's paid off, whatever. Like there's no reason not to condo it. I think if you're looking to like maximize your exit, there's a pretty big premium there. And I think a lot of owners should be looking at that, and they're not. And I'm unclear as to why, because there's just uber demand to buy small bay from users who can leverage the SBA's 90% financing terms with a 6% interest rate. It's like free money for the user. It's a arbitrage for the seller. It should be happening, and it's not, and I don't know why.
And like I thought too, like the big beautiful bill with the depreciation, well, that like
another reason.
Yeah, you figure that like, hey, maybe even some of these small bay guys have got sophisticated accounting going on, and they might take advantage of it.
Right. Look, you're either paying your own mortgage or you're paying someone else's, so the money's going somewhere. So thank you for joining us. That's the end of this episode. We really appreciate it. This was episode 2. Catch us for episode 3 coming up, which is going to be all about iOS, industrial outdoor storage. Thanks again to my partners here, Mike Oretsky and Tom O'Loughlin. Comment below. Let us know what you think about this episode. Like and subscribe. And we will be launching this on Spotify, Apple Podcasts, YouTube, and all the other social media platforms. So check us out on there. Thanks.